Very good morning, good afternoon. Welcome to the week ahead video with myself, Giles Coughlin. Now, why do we look at this week ahead calendar? Because we're looking for high probability trading opportunities. So in this last week, there was a high probability trading opportunity that was flagged on the cheat sheet. You can see here the Australian CPI print came in higher than markets were expecting. Now, this was on the Wednesday, 26th of June, and it did increase expectations that the RBNZ would be needing to start increasing interest rates. And if you just take a look at short-term interest rate expectations here, what you can see is that, there we go, there was a little uptick in expectations for interest rate hikes. You can see here for the RBA, let's get the right central bank. You can see that little uptick there that came in the middle of the week last week, just showing now higher for longer out across the curve, and that supported the Australian dollar on the print. Now, what we were looking for was highlighted in the cheat sheet on the Wednesday. You can see here we were looking for these prints. Now, we didn't get exactly what we were looking for to make it, absolutely no-brainer. But when we looked at the details in the following morning, you can see very clearly that this was a big yield spread mover in the Aussie 10-year and New Zealand 10-year. And then for the following, the webinar and for the following session, we highlighted that there was an Aussie New Zealand dollar intraday buy option and a swing trade option from market looking for a target of 100, okay, with stops below 1.0850. And that was all flagged on the June 26th London webinar and flagged in the cheat sheet. So that's why we're looking at these opportunities, because when we see a high probability opportunity like we got here with the Aussie New Zealand dollar, so that big move higher, looking for a pullback, that 10900 or at market on the day after the event, and you can see the yield spread just ticking, higher on expectations, and it's reasonable to have a target of 100, and it's still reasonable to look for buying options from retracement to that 10900. We're not going to get any significant inflation data out of Australia until at the end of July, when we get second quarter data, and Aussie New Zealand dollar upside looks very, very reasonable, and that is a reasonable swing trade option. And if you're in there from market anytime during any of these pullbacks. We also flagged a pullback in the intraday London session on the following day, looking for a pullback. That was to the daily pivot point as an alternative to the 10900 entry. So that's why we're looking at the economic data points for that high probability conviction trade. So let's have a look for this week. Now, Monday's very quiet. There isn't any data that's really likely to move markets. We got the manufacturing PMI data, but it's the final print. And manufacturing data out of the US, it's in contraction and likely to remain in contraction. It's a little bit better than the markets are expecting, unlikely to move. The needle might be worth looking at prices paid just in terms of broad inflationary pressures. But it's going to be the US labor data on the Friday, which is going to be the real interesting one for the US dollar. However, on Tuesday, we do have Eurozone inflation. Now, if this comes in below market's minimum expectations, then we could look for more reasons to sell the euro. There is significant risk at the moment with the euro, with French elections underway. And if we just take a look at the yield spread between the French 10 years and German 10-year bond yields, that sharp spike higher, that's showing distress in the bond market regarding what happens with France. Are they going to swing to the right? Will those right nationalist parties be anti-Europe? Will we see a Frexit? That's the sort of fears that are being bandied around, and that's weighing on the euro in the near term. So the inflation data, if that comes in lower than market's expectations, below 2.3, 2.7, then we could see some more euro downside. And maybe euro dollar downside might be worth looking at ahead of the European final elections, when it all gets sort of done and dusted around the 7th of July. So we got some polls, we got a week basically of risk in the euro. So selling the euro is what we'd want to do. Wednesday, quiet, got some overnight session. Got some UK PMIs, only interested in that really if it's a big miss, looking for opportunities to sell the pound. We then have got the ISM data out of the US. Now that's a potentially decent leading indicator. And I'm only interested in selling the dollar if we see a miss in the data. Don't forget, we also get the prices paid component of this. And we also get the employment component of this. So depending on what we see for the employment, that could be interesting for setting the mood for the non-farm payroll, as will the ADP print. It's also coming out on the Wednesday. Let me just see. Yeah, ADP data's coming out 1:15. And then we've got the ISMs for the services data coming up at, not ISM, it's the S&P Global Services. No, it is the ISMs. Hang on, I'm getting confused here. It's the ISMs, which is the more influential PMI. It's the final S&P print, so ignore that. But this one we want to look at for June, okay? And we're interested in a miss of the data. That's what we'll be keeping our eyes on. Have that all updated on the cheat sheet. Thursday, Swiss CPI. If you remember with the Swiss, we have seen a bit of choppy action. SMB's Jordan, when the Swiss was sort of very weak, said, oh, we see upside inflation risks. Maybe it's because of the weak Swiss franc. Don't forget we can intervene in the FX markets. In other words, SMB Jordan was sort of a veiled threat that, if the Swiss franc keeps getting weaker, we can buy euros, we can buy the dollar to support the Swiss franc. Then we saw the Swiss franc move higher. Then we had the SMB meeting. And then Jordan says, oh, don't forget, we can intervene in FX markets the other way as well. We can sell the euros and sell the dollar to strengthen the Swiss franc, and we can buy it and sell it to weaken it. So then we saw the Swiss franc weaken again. Okay, we got a dovish outlook for the Swiss franc, and Jordan's comments here and here are just trying to, literally play ping pong with the market. So what that means is there's two-way opportunities with the data. Big miss, then we can look for some more Swiss franc upside. Swiss franc downside, a big beat, we could look a little bit of Swiss franc upside. So there's two-way opportunities. I'll get up to the cheat sheet which way we're looking at, but there could be, a couple of opportunities there. UK PMIs, not really going to grab much attention for me there. However, we've got non-farm payroll and Canadian employment data to end the week. Now remember, the Fed, in their last projections, you can see, look, unemployment is projected to be at 4%. Now in terms of their last projections for June at the last dot plot meeting, they projected that unemployment was going to move up towards 4.2% for 2025. So they're expecting it to move up. Now, if I notice that the move up in unemployment, they're also, equating that with cutting interest rates. So they're sort of showing us their timing here. They're expecting unemployment to rise, and then they're cutting interest rates, and they're expecting 100 basis points of rate cuts from one rate cut. So in other words, 5 rate cuts between now and the end of next year. So what will make them move a little bit early is if they start to see this surprising. So if this surprises all analysts and comes in at 4.1 or even 4.2, then expect dollar weakness. And obviously the last sort of continuous jobless claims that we got out this week, let's see on Thursday, do you see here how that sort of came in right higher than markets were expecting, right? And that was one of the highest readings we've had in some time. So yeah, is that is that a leading indicator for weakness in the US labour market? We'll see. And one of the first pieces of the jigsaw puzzle will be how unemployment's doing on Friday. But a big miss here, then look for dollar selling. That would be gold upside, dollar selling, maybe euro US dollar upside, depending on what's happening with French elections. Now, Canadian employment data, very important. If the Bank of Canada starts to see weakness in the labour market, then they're going to move. And they're likely to cut interest rates in their next meeting. So a big miss in the Canadian labour data, look for CAD selling. So strong US jobs, weak CAD jobs, then look for dollar CAD upside. We'll get that all done on the cheat sheet. And of course, that risk event will be covered live. Okay, folks, that is all for this week. And I hope you have a very good week, and we'll catch you up in the daily webinars or on the live risk events. Thanks and take care.